Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, August the 1st. My name's Eric Wilkinson. You might recognize me as the Wolfman from mainstream media, but I'm here to teach you guys some different option strategies you can implement into your portfolios, but please do that in your own way. Also remember, past performance in any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data across the pond. We got a bunch of PMI numbers now. Purchasing Managers Index, anything above 50 is expansion, anything below 50 is contraction. It's a great gauge for the overall economy going forward. Now, overseas, across the pond, we usually look at the flash estimates. Here in the United States, we look for the ISM, which is the Institute for Supply Management. Now, overseas, we did get some manufacturing PMI, but keep in mind, it is not their flash, so not quite as important as those. So I'm just going to kind of breeze through these. And we can say Spanish manufacturing, Italian manufacturing, French final manufacturing, German final manufacturing, and the rest of the broader European region, final manufacturing PMI numbers coming in below 50. Yes, for the most part, they were somewhat in line, but all below 50. Not a good sign there. And then Great Britain's PMI also came in below 50 at 48, and it was expected to be 47 and change. Slightly better than expected, but nothing to write home about, to be quite honest. Great Britain left their bank rate unchanged at 0.75. Remember, yesterday we did end up having our FOMC meeting. Well, we knew we were going to have that, but we did end up getting that rate cut of 25 basis points. One of the things that came out of that was that it was a little preemptive. They aren't really sure that it's going to continue to be a thing where maybe the next 2 or 3, or we might have 2 or 3 rate adjustments. That's to the downside, probably a couple of basis points, 25 basis points here and there sprinkled in to lower that, maybe just slightly below 2% is what I'm guessing at. That's kind of where we were talking about. We should have been pausing way back in 2018. But they're probably going to lower that. It's just an adjustment. They're basically trying to say we aren't wrong at this point, but we are trying to spur a little bit of inflation, create some bubble again, which is why they're doing that. All right, so let's talk about some economic data here in the United States. We got our own challenger job cuts, came in at 43%. We had unemployment claims coming in line with expectations at 215,000, expected to be 212. Just a precursor for Friday's economic data point where we get the non-farm payroll. So tomorrow is Unenjoyment Friday, which is what we used to call it on the floor. All right, talking about here in the United States, our ISM manufacturing PMI, which is the Institute for Supply Management, our main economic data point I like to look at for sure. It is the most forward-looking data point we have, and the manufacturing PMI for the Institute for Supply Management came in at 51.2, expected to be 52. Lower than expected, not necessarily a good thing, but it is over 50, which shows expansion in the economy. We're good there. Then we look at a construction spending. This is dismal, you guys. Came in at a negative 1.3%, expected to be a positive 0.5%, so almost a 2% miss on that. They did revise last month's number higher to negative 0.5%, but it came in negative 0.8%, so not much of a revision there to make up for that number. Construction spending, not good at all. ISM manufacturing prices coming in at 45. This is the same aspect. Anything below 50 is contraction. We're seeing actually prices go down. The mandate for the Fed is to see prices go up. We're not seeing that happen. And then finally, we got natural gas storages coming in at 65 billion cubic feet, expected to be 57 billion cubic feet, so slightly under a 10 billion cubic feet build. All right, on to the overall markets. We've got crude oil coming off today after yesterday's big build. Yesterday's big drawdown. 2 months in a row, we've seen some massive drawdowns, but it hasn't given a whole lot of push to the upside with crude oil. As a matter of fact, it's been acting quite opposite of what those inventory numbers are, but the markets in general have been doing quite the opposite of what we would expect with the economic data points and everything else that's been coming out. All right, gold is trying to make a bit of a bottom here. It might start making a move to the upside. If we're going to have easy money, we should expect the dollar to start weakening. A little bit thing that happened yesterday. We actually started seeing the dollar strengthen against a lot of currencies like the pound and the euro. So that easy money may not affect us as much as across the pond, because remember, they're in a recessionary type cycle already, and their easy money might supersede our easy money in this global coordinated effort on interest rates and economy going forward, which is bizarre to hear that we are a global effort now. But we've got gold off by about 10 points. But when we look at this chart here, this chart looks like it is a bottom. I mean, we can look at this and kind of draw lines where we've got basically, trend lines kind of going like that. But what I'm talking about is that doji coming down, testing the trend line. And now, to me, it looks like we are going to start moving higher. Weaker dollar could really influence that moving higher as well. So I might be looking to add some stuff to the upside in gold. Right now, gold is one of the few things out there that has really high implied volatility. We're in the middle of earnings season, so it's hard to pick a lot of stocks that have high implied volatility. As a matter of fact, implied volatility percent we talk about in great detail in my webinars. Well, with the implied volatility percent right now, even the stocks that are going into earnings are having a difficult time getting up into those high levels for some sweet premiums. But we know we're getting volatility crush, and I talk about that. That's why we can still take advantage of premium selling strategies in that type of environment. All right, bonds moving higher. Mostly a signal. Fed said that they're going to start cutting interest rates. I think that these guys are going to most likely price this out where it's several. They're going to overdo the interest rate cuts. But you can see it came up and tagged very close to at least that 157 handle, which is going to be my major resistance area. We've seen it happen before. I think we'll see it happen again this time. Tweezer tops. Are we going to roll over? I think the Fed has signaled what they're going to do. They said they're also economic data point dependent. We haven't seen any real bad economic data point to really cause them to cut rates now, other than this global effort that we have going on. That's the only reason to be cutting interest rates at this point, in my eyes. Yes, I do think they overdid it to start, but I do think they should let this meld and let people start to get used to higher interest rates. And by cutting them, that doesn't do it. We're still in the teens in the VIX, but the Dow Jones, everybody across the board really starting to rally yesterday after their big tantrum. You can see they threw a tantrum right after the FOMC release and with Powell talking. It really, when the FOMC released that they cut a quarter basis point, the market actually was celebrating that, but then Powell started talking and really threw the monkey wrenches in there because he was really not as dovish as the overall market wanted. So what did we expect? Yes, it threw a tantrum and started slamming it down like they were going to get another interest rate cut right away. No, they're not going to. It's not going to change their opinion. So today we're starting to move ourselves back into positive territory with this 250-point rally in the Dow Jones. NASDAQ above yesterday's high. Again, the whole tantrum is over. They went to bed. Everybody woke up and was like, okay, well, our tantrum didn't do anything. Let's just buy them now. And as we can see, we're looking at an 8,000 handle here in the NASDAQ pretty soon, up 130 points as we speak. Now, E-mini S&Ps are positive, not quite as robust as what we were seeing there in the NASDAQ above yesterday's high, but we very well may approach that today. As you can see, this is, to me, a very bullish sign. After we got that bearish signal, we've got almost a full retracement, and that means we are moving higher. If we stay inside day, then we could see anything happen, but I think that this is becoming very bullish. You can see basically when Powell started talking, the market just slammed to the bottoms of the day on the interest rate cut, and then on the slam down of his speech. For the most part, we just got bearish into the end of the day. Overnight inventory tried to slam it off, but coming into today, it was a rebound. Both hands turned in to buy on this Thursday, turnaround Thursday. Now, you can see on the XLK, yesterday I was actually very lucky in being able to get out of this. Remember, I had on some long puts in XLK and had on the September, bought the 80 puts. Originally paid $1.73. I was able to get out of those for $1.70. I had a working order in there, so I lost a couple of pennies on those, both in my IRA and in my margin account, but got that swoosh to the downside and was able to get out of that. So overnight, I was pretty much flat. I was scrambling around, reading and watching the testimony, and missed my opportunity to trade a couple of things in there for earnings. So no earnings trades, but Costco was making this move. It looked like a very nice bottom yesterday. We've got this move where we've fully engulfed yesterday's candle, so that is a very bullish sign. I looked at this to see it wanting to try and trade, make new highs, maybe even go test that 300 handle. So I decided to go in there and get into the October because I want to get past all that theta decay, right? Out far enough where we're past the theta decay, and bought the October 290 calls in there for $5.73. So playing that to the upside. I want a quick move here. Outside of earnings is where I landed my, or actually out into the next earnings cycle is where I landed my October. So I should be able to see that expansion in volatility as we inch closer to that event. That will help me out even if I'm directionally wrong. So playing this to the upside both in my IRA and in my margin account, and we'll have to see what happens. We've got a couple of earnings things coming out later today. Nothing major, though, that I'm seeing that's really sparking my interest, but follow me on Twitter because I should be I'll be trying to throw those out to you if I have time, because today we've got a webinar and we're continuing this. Like, we just got past we have a market neutral stance, and how do we take advantage of it when we think we're going to stay in this tight range? Well, something like Costco, where we're in that tight range and we expect to blast out of that, we need to come up with a strategy. Well, I've got all kinds of strategies for you that we will narrow down when we have this big outside move that we expect. We're going to whittle that down to find out the most appropriate strategy for that underlying. So check it out at Pro Trader Strategies. I'm not just teaching you how to do strategies. I'm teaching you how to implement those strategies, okay? That's the difference between me and online and most other people out there, all right? I'm teaching you how to implement. They're teaching you how to design, all right? If you can't take that, take it easy.